Hey, my name is Tucker Kraus and welcome to my channel. Today's video we're going to be taking a look at UEX Corporation. So without further ado, smash that like button and let's get right into this. Also, you might be wondering why this video is coming out on Wednesday. This week I'm going to be doing 3 videos, same thing next week because I have school starting up and I'm going to be dropping to 1 video a week after that. So I'm going to do these 2 weeks with 3 videos to help make up for that a little bit. Also, I know there's been a ton of requests for lots of the Australian stocks, but I can't purchase them. So I just want to quickly look at some Canadian stocks that I can actually purchase for the next pullback because I kind of missed the boat on SPUT because I was kind of trying to compare companies and kind of missed out on that. So without further ado, I will make sure to get to lots of your guys' requests as soon as I can, but without wasting any more time, let's get right into the video.
So, as I just said, today we're going to be looking at UEX, which trades with the ticker symbol, well, UEX on the Toronto Stock Exchange, and UEXCF on over-the-counter exchanges in the United States. They're currently trading at 38 cents per share, although it's probably hard by the time you're seeing this, knowing how SPUT is messing with this stuff, like I just said, and with a market cap of $175 million as of September 5th, and a price per pound of $1.76, so quite low there, though it would be nice to see it a little bit lower, below that 150 mark, though it's still really, really good. Of course, no dividend, and as I said, over the counter, and on Toronto. Now, this is the Toronto chart, since that has higher volume as of September 5th. We can see, oh wow, it doesn't look good here in the short term here. It's just ran up a whole bunch, though of course, when you zoom out, still looks like a pretty good buying opportunity, though me personally, I'm still waiting for a pullback. I'm gonna try and stop talking about that. I think I'm just a little bit salty, but that's not important. I'm sure you guys out there are enjoying your gains, so I won't ruin that for you. So, this slide here just goes over their share structure. We could see that they have 500 million shares when it's fully diluted, and if you take out the options and warrants, 450 million. I'm not a fan of that, of course, especially because it is significantly higher than their market cap of 175 million. Though the other thing here is that they don't show their entire share structure, they only show their largest shareholder. I wish they would give us more info on this, but because their largest shareholder here is a investment company at 2.35%, that means the CEO and board ownership must be minuscule, which is really not a good thing because it shows they might not be very confident in the company if they don't own very much of it, because obviously if they have more capital in the company, they want it to succeed. And so in a recent interview, the CEO did address that issue. He said that they are planning on increasing CEO and board ownership and purchasing more shares, so that's a good thing. Though just a few weeks prior, he also exercised options on the company, so take with that what you will. So of course recently they acquired JCU, so they have a whole ton of projects now with 100 million pounds of combined resources plus 50 million pounds of historical resources. So that is great to see. They have a whole bunch of projects here. Of course, they also do have, via JCU, a 5% stake in Wheeler River, a 15.5% stake in Millennium, and a 15.9% stake in, that. So we can see that they also paid at $6.27 per pound, not $7.94 per pound, and never valued, so that does show that they got these for pretty good deals, most likely, although I don't know what a typical acquisition price would be, though I'm just assuming because it's well below spot that's good. And so this is a pipeline just trying to show in their general timeline. The vast majority of their projects are just grassroots, like pre-exploration or very early exploration stuff, and that UEX owns themselves. Not a whole lot is ready to go right into development and production right now. I believe they only had 1 PEA completed of all of their projects, so that also is going to hurt the DCF since I need that to build a DCF. So let's quickly hop and look at that one project that does have a PEA, as well as just the combination of other deposits. Alright, so I've got their project pulled up here. It has 35 million pounds in the ground, and there's a 10% royalty on it. It's a decent grade, at least it's not like a horrific, really small parts per million grade, but it's definitely nothing crazy. So we have 0.154% here, with a fairly small capex, or fairly low capex, to say, of 115 million for initial, and 144 million total. It's a decent OPEX of 31.86 per pound, and with spot price is now actually above that, though of course OPEX isn't all of their costs. They also have the royalty, taxes, capex, etc., etc. Now, there was no exact... Here, let me scroll over so you guys can... Is it going to let me? Here. There we go. Now you guys can see that. So there was no exact timeline. They only gave out some years. They only have a PEA right now, so construction is probably a few years off. And they don't have like a DFS or something that's way more advanced. So it's likely a few years off. So this will just assume construction begins in 2023 and production by 2028. Oh, and I forgot to read that out. According to their calculation they showed in their technical report for their per NPV, they're only actually going to be producing 15.86 million pounds of that, or maybe that's only like the first phase or something like that. Now, this is just looking at all of their different stuff. They have, as we saw earlier, 99.5 million pounds of uranium in the ground. They also have about 5 million pounds and 5.5 million pounds, 5 million pounds of cobalt, 5.5 million pounds of nickel, and that uranium, when you average out all the deposits, is actually not too bad at 0.872%. And these are all in parts per 100 grade, of course, and 0.19% for the cobalt and 0.21% for nickel. I'm not sure if these are large or small deposits, and if these are good or bad grades. I know a bit more about uranium, of course, and this only includes the company share, of course. Alright, so here I have a discounted free cash flow pulled up. Again, don't click off yet. So, a couple things on note here. Of course, I use a 10% discount rate, and 50% capex and opex inflation. So that, of course, makes these numbers more conservative. Also, this only includes that project with a PEA, so they still have tons of other deposits, as we saw earlier in their presentation, plus the royalties from Denison, Cameco, etc., etc. And so, the other thing, again, is that with spot price, of course, increased significantly alongside the stock price, so the differences here would have been lower either way due to the current valuation now being higher. So, when we look at this, we see negative at $60 and current uranium spot price, and then it becomes quite overvalued at $80 uranium, and at $90 uranium is where they're currently trading at. Though, the thing is, like I said, because they have all these other deposits, those are, of course, priced in. Similar to UEC, of course, you have to be willing to make that risk calculation. Okay, what do I think of this company? Do I think they're going to be able to get all these other projects off the ground? If yes, it could be a great company. If you're only betting on that one project and you're not confident on all those other projects, then you might not be a big fan of it. Either way, this isn't financial advice. Do your own research. Thanks for watching. I will see you next time.